Are you getting closer to retirement and you're worried that you're not going to be able to bridge the gap between, you know, what you're going to be getting for retirement money versus how much it costs to live on a monthly basis? And you've been researching, this thing called the reverse mortgage, and you've heard a lot of bad press about, how people lost their homes in the past and all kinds of crazy things happen with reverse mortgages, or at least that's what you've heard. My name is Amy Debusk, and I'm a certified mortgage planner. And for the last 25 years, I've helped a lot of retirees obtain a reverse mortgage and understand how it can benefit them in retirement. So today I want to do a deep dive on the reverse mortgage, and there is a lot to unpack here. So first and foremost, I would love to acknowledge the fact that yes, there was a lot of bad press and a lot of negative stories that came out back in the 60s and 70s about people who lost their homes, got kicked out of their homes that had a reverse mortgage, and all those stories, unfortunately, were true. So what's the difference between now and then? Back in 1988, the Reverse Mortgage Reform Act came into play, and that is when the United States government took over the reverse mortgage loan product. It is now backed by the Federal Housing Administration, and there is an insurance policy on all reverse mortgages that protect the owner of the home from any of that happening. Now, I want to note for you that a reverse mortgage is a non-recourse loan, and what that means is that legally a lender cannot foreclose on the house if the house is upside down, or if, there's more owed on the house than what the house is worth. So that is in all of the documentation and the disclosures that this is a non-recourse loan. So nobody can ever come after you for the debts owed on a reverse mortgage, and nobody can come after your heirs. Now, that's a big, huge myth wanted to bust for you. Now, here's some details that you might have not known about a reverse mortgage. So you do need to be 62 or older to get a reverse mortgage. And the two things that are most important on a reverse mortgage is, number one, how much equity do you have in your home? And how old are you? Those are the two factors that go into figuring out how much of a loan you can get. Also, you might not have known, but you can actually buy a home with a reverse mortgage. So it's called a reverse purchase, and that's where you would put a very large down payment down, and then you would have your reverse mortgage where you wouldn't have to pay a payment. So I want to explain to you in the simplest terms of how a reverse mortgage works. It is simply a mortgage. You still owe this money and you still have a loan, and there is interest being charged on the loan. And there's also private mortgage insurance being charged on the loan. It's just that you don't have to pay a payment on the loan while you're living in the house. So each month that the reverse mortgage is in place, the monthly payment, meaning the interest and the private mortgage insurance, is being tacked on to the back of the loan, and the loan is growing. Most of the time, interest rates are a little bit lower or the same as the same rate as your house is appreciating in value. So there are many reverse mortgages where when you do finally exit the property, now exiting the property can mean either passing away or having to go into assisted living or skilled nursing long term, and where you no longer can live in your house. So once you exit the property for more than 1 year, that is when your heirs, your estate, or your family would need to deal with the reverse mortgage. Now, the lenders all give 6 months to your heirs or the estate to deal with the mortgage, And there's a couple of different ways they can deal with it. They can use other assets in your estate to pay off the mortgage, or they can sell the house and then just pay off the mortgage with a portion of the proceeds, and then they would keep the whatever the balance of the proceeds are. Or if they knew for certain that the house was worth way less than the loan, they could allow the bank to just handle it for them, and the bank would deal with getting the house sold and taking care of the loan. Now, if you have any questions about a reverse mortgage and what it takes, or whether or not it be right for you for your retirement plan, I would love to talk to you. It is a free discovery call that I offer, and you can just log on to talkingwithamy.com. That's talkingwithamy.com to book your free discovery call.